today I chose as the stock of the day John Lyng's Group. JLG is the ticker code. Citi, for one, has lowered its price target to $6.50 after annual growth fell short of expectations. This share price was hammered yesterday and is getting hit again today. So Citi trimmed its FY24 and FY25 earnings forecast by 5% and 7%, but does see margin improvements accelerating into FY25. So, look, let's start with you, Claude Walker from A Rich Life. I know that this is not the type of company that you're necessarily interested in investing in, but this one's been mentioned on this program quite a bit, usually pretty favorably, because it does a lot of those cleanups and the repair work after natural disasters. So it gets steady work from states, from my understanding, councils as well. So what was in that update yesterday that really took the market by surprise?
Well, I think that the thing that surprised people from the update, to answer your specific question, is that the headline is all upgrade, but then the share price went down 8%. And I think some people were just saying, oh, what is going on? Why is it down, basically? And I think that the reason for that is if you dive into the actual, data table that they've released with their upgrade, the upgrade is happening in the catastrophe business. So, whenever there's a flood or a fire or etc., that they get more work from that through their insurer partners. And but the actual non-catastrophe business was a downgrade. So there was an upgrade and a downgrade, and the quantum of the upgrade was a little bit bigger than the quantum of the downgrade. So that's why overall the company is able to call it an upgrade, but it's about a 4% upgrade to overall total EBITDA. And the devil in the detail there is that the commercial construction segment EBITDA is down from a loss of 10 million to a loss of 15 million, which is not great to see, and probably goes to the underlying economics of their business. And also they had a Porter Davis bad debt write-off, which I'm sure has people a little bit worried, just because obviously the risk in the construction sector, and it's far from just John Lyng's Group that suffers this risk, is that if your counterparties go under, then you can end up holding the bag. So I think that probably brought to the fore some of the risks in their segment.
Mm-hmm. Yeah. Okay. So, is this a buying opportunity in your view, if you're an investor that's interested in John Lyng's Group?
Look, I'd say definitely not a buying opportunity, unless you're a super short-term trader looking for some bounce or whatever. I can't predict if there's going to be a bounce. Maybe there will be. But unless you're just some pip trader looking for a bounce, I think there's no possibility that I would call this a buy on the fundamentals. Just because what has happened, if you look at sociologically, I think that that's a very useful framework. Sociological framework, you're looking at what are people saying? What are people thinking? Investing's about what do I think this is worth, but it's also about what do other people think it's worth, and am I above or below them? And what we had with JLG is in the run-up in the last couple of years, this became a super fundy favorite. And I think that the first funds that got on board, like maybe 3 years ago or more, they had a perceptive thesis, which is, look, this is a beneficiary of increased catastrophes. So as we have more bushfires, floods, etc., which is the long-term forecast, then these guys should do well because they are getting that insurance work. But the problem is that doesn't mean any price is the right price for this company. And not only did it become a fundy favorite, that on top of that, it also become a retail newsletter favorite, getting recommended at a few times, fair different places. And then it just got, these momentum. It happens with all stocks. And I think we'll talk about one last as well, which is one that's definitely in the same nexus where the funds love it and retail investors love it. And the momentum of the stock price has just managed to attract momentum traders as well. So everyone loves it. And it becomes this sort of flywheel until it doesn't. But JLG is what happens on the other side of that, where what you had in October last year was the CEO sold $25 million worth of shares at $6.25. And I think that that's really your sign there. Look, the momentum in this is dead. The story was so hyped and so, this well known, whilst true, the share price had just fully priced in that story. And so there's nowhere to go. Where's your incremental buyer? Like fundies love it, retail loves it. Where's your next kick going to come from? You need to have really strong earnings momentum in order for that to happen. And, obviously the small upgrade based on the catastrophe business yesterday is just not enough. When the PE ratio I beg your pardon, is even if I take the earnings estimates, which I think is about 20 cents, and upgrade that by 10% to 22 cents, then it's still on about 22 times earnings. Now, to pick on, I guess, a similar quality business that I own, SRG Global, that's on about 15 times. Adbury, I don't own it, but it's in the construction industry, 13.5 times. Big River Industry, which I admit is probably lower quality company, and it's also in construction, but it's on 9 times earnings.
Mm-hmm.
And I'm not saying that just because these ones are cheaper, they're better. Like I'm not even that bullish SIG, which I own myself. I wonder if I got that wrong. But the point is, these businesses, they don't usually trade on 20, 30 times earnings, and that's for good reason.
Yeah.
Basically, they're not the best economics, especially in, as you said at the start of your question, it's not the kind of business I go for. Why is that? Look, at the end, in 1981, at the end of an inflationary period, Buffett made it quite clear that the companies that have done best at the end of 10 years of higher inflation are the companies that have an ability to raise prices easily and they have low working capital needs.
Yeah.
Construction doesn't tick either of those boxes. So while there was a cool narrative going on during the low interest rate time, we're in a higher inflation time now, and this is the kind of business that Buffett tells us does have a harder time. So that to me says you're probably better off buying the one on a low multiple than a high multiple.
Yeah. All right. Interesting. Josh, what do you think? It's got a U.S. growth strategy. Does it justify the multiple that it's trading on?
Well, yeah, it's been a little bit of a victim of its own success lately. It's down about 40% from the highs, and because it was in such a strong upgrade cycle for years, this recent update was, like I said, missing analyst expectations, but it was upgrading its own guidance. So, clearly the analysts were more bullish than even their own company was. I think when it reached its highs, it was sort of at a 50-60 PE at that stage. It had accumulated that on the back of those upgrades. It's one that we've paired in the past with an insurer because obviously the two offset each other. Insurers have been doing really well on the back of higher premiums after a lot of claims and then a lack of claims in the last year or so. So JLG sort of suffered and done the opposite. I think it is a quality company. It's all about, I guess, the price that you pay for it. Probably a little bit too early for us to start to pour into this one, but we do like the construction space, and I think given the consolidation in the industry, there's every chance that a big name, a strong performing name like JLG picks up market share from these companies going under. So a little bit too early to accumulate for the long term, but it is a good company to have on your watch list. If you're after something right now that makes money right now benefiting from it, we'd probably prefer CSR. CSR are a premium product in the space. They're going to be, literally the bricks and mortar example here, and they pay about an 8% yield too. So I think that's more something that's going to benefit from the right now, and JLG benefit over the long term from this construction boost.
Guys, thanks. That's the stock of the day. Let's get to the company.